Hi everyone, and welcome back again to Startups Ask. This episode is starring angel investors and VCs answering questions from the entrepreneurs and founders. The length of this show is 30 minutes. We will be giving insights on a topic, and then we'll be taking questions live from the audience. Let me start by introducing myself. I had my own family office in Singapore and Jakarta. I worked as an investment banker and advisor to family offices and angel investors in Jakarta, Indonesia, helping startups from a diverse background, from fintech and B2B tech all the way to consumer startups. I was raising funds for them and providing them with a range of services, just as Convanto does today. After 15 years of staying in Singapore and Jakarta, I came back to India. I did investments for a bit and then returned to advisory. That is when Convanto was founded. Today, Convanto is one of the most well known boutique investment banks in India, led by a female founder. I am also a venture advisor with Loyal VC, the INSEAD-led Canadian VC Fund, having a core portfolio of over 160 investments in more than 35 countries. I'm also a partner with GST Venture Studios, a Silicon Valley-based venture builder. Over the years, I've arranged funding for startups and growth stage companies in diverse sectors like edutech, fintech, consumer tech, B2B tech, agri-tech, health tech, food tech, disruptive and deep tech, as well as non-tech sectors. And please do have a look at my website for the wonderful testimonials written by my clients. This month, I've been nominated as the top 10 women leaders in wealth management 2021. My expert opinion is often sought by leading business news channels and publications like VCTV, Business World, and I have participated in over 155 talks all over the world. You can easily see them on YouTube and VCTV streaming sites. I am connected with 300 plus investors globally, and I am picking up global deals while being sector agnostic. Our ticket size is $1 million to $25 million. And please do visit our website www.convanto.com. Now, let me start today's topic by giving you some VC news. The companies that have been funded in the last week. Trell raises $45 million from Myray and H&M. Now, what is Trell? Influencer-led social commerce platform Trell has raised $45 million in a Series B funding round from Myray Asset, H&M Group, and LB Investments at a post-money valuation of $120 million. Existing backers along with KTB Network, Samsung Ventures, and Fosun RZ Capital have also participated in the funding round. The company launched its social commerce model in August last year. The platform sells lifestyle products and its major customer base is in Tier 2, Tier 3 cities. Pulkit Agarwal, Trell's co-founder, said that the company has fulfilled 1 million orders at an average order per value of rupees 750 rupees to 800 rupees. So this is one of the great news. I have another news which is from China. Money probably can't buy happiness, but it can certainly buy bitterness, which only gets worse when stirred among family members and in relationships. Now, China, world's second largest economy, is cracking down on its powerful billionaires. Chinese government is putting curbs on these powerful Chinese companies and the billionaires who own them. Even as the world's 10 richest people added $209 billion to their net worth in the first half of 2021, China's richest tycoons on the Bloomberg Billionaires Index saw that their combined fortunes shrink by $16 billion. Shares of its flagship companies plunged an average of 13% over the period, and the first time in at least 6 years that they have declined when the broader Chinese stock market was raising. Now, Didi's share have plunged 14% since its June 30th debut on the New York Stock Exchange, slashing the wealth of the company's co-founders by nearly a dollar of 800 million. Behind the losses is an offensive that has only intensified since November, when Mass An's group company was forced to withdraw its successful IPO at the last minute. Policymakers are tightening regulations on some of the most important facts of Asia's largest economy, from financial services to internet platforms and the data that underpins most large companies in modern China. In the last salvo, regulators released a new draft of the rules on Saturday that would require nearly all domestic companies to undergo a cybersecurity review before listing in a foreign country. Now, Sheng Wai, the billionaire founder and chief executive of DD Global, had scarcely a moment to reveal in his firm a $4.4 billion New York listing. Within 48 hours of the initial public offering, which valued the Chinese ride-hailing giant at around 70 billion, regulators in Beijing spoiled the party. On July 2nd, Cyberspace Administration of China said it had launched an investigation into the company, and the announcement shaved 5% of its share price. 2 days later, the regulator ordered Didi's mobile app to be pulled from app stores in China, halting new customers from joining the service. The CAC alleges that Didi was illegally collecting the usual personal data. Didi said that it would strive to rectify any problems, but warned of an adverse impact on its revenue in China. Now, predictably, the ban also adversely affected the company's market value. When American markets opened on July 6, Didi promptly shed more than a fifth of it, and its now worth is 22 billion, less than a week ago. Now, this move is an escalation in China's crackdown on big technologies firms. And on July 5th, it is told that three other apps, Yunamian and Huge Bang, which operate lorry hailing and cargo apps, and Boss Zifin, an internet recruitment service, to stop enlisting new users. The trucking services, which merged under the Full Truck Alliance, and Kanzun, which owns Boss Zifin, had together raised 2.5 billion in American flotations last month. Now, the thing is, the focus on Didi and other US-listed Chinese firms indicates that China's tech crackdown has entered a new stage, according to Alex Capri, a Singapore-based research fellow at Heinrich Foundation. Data has become increasingly strategic, particularly as more powerful AI algorithms and machine learning, combined with the state-sponsored cyber activities, become more persuasive. And that is what is happening is that this phase of China's tech crackdown is future defined by the ties these companies have to do with United States. Now, just months after bankers celebrated a record haul of taking Chinese companies public in New York and Hong Kong, suddenly they have a rude awakening, and deals have been shelved and investors are nursing heavy losses. So this is the breaking news of VC, field from China that we have today. And a chill has settled over global finance after a fortnight with China first cracked down on its Uber-like DD Global within days of US trading debut, followed swiftly by State Council announcing closer scrutiny of all offshores listings. And on Saturday, a cybersecurity review was proposed for companies with data on more than 1 million users, before they seek to list in foreign countries. Now, the warning signs have been flashing for a while, as underwriters totted up a record of $1.5 billion in the fees last year from helping Chinese firms with initial public offerings offshore relations between China and US were at low ebb. In December, Donald Trump signed a bill that could delist Chinese companies that don't meet audit inspection rules. So simultaneously, President Xi Jinping stepped out oversight of a big technology firms, partly to secure the treasure trove of data they control. Now, this is a big blow in China. What they are trying to do here is, being the China is the second largest economy and is cracking down on its own powerful billionaires. And Chinese government is putting curbs on these powerful Chinese companies and the billionaires who own them. Now, coming to my today's topic. My today's topic is about scaling up and growth strategies. I would be sharing a PPT for all of you to have a look as to what is scaling up and growth strategies in startups. I hope my screen is visible to all of you. Here I am presenting you a PPT on Convanto's Guide to Scaling Up and Growth Strategies for Startups. Now let's see, I've already spoken a lot about myself. If you are not scaling and you want to, then you need to go in closely examine the 4 areas: people, strategy, execution, and cash. Now let's see growth versus scaling up. Growth involves increasing revenues, generally by employing a lot of resources. Scaling up, on the other hand, involves increasing revenues, but doing so by incurring minimal cost or resources. Now, in order to scale up, the organization must have perfected its product market fit. Once the organization is sure about its customer segmentation, acquiring costs, and product features, only then it's right to scale up. After analyzing, that is, the units are economically sustainable, the organizations can scale up. Identifying target audience. Gather survey data. Start by issuing surveys via email blasts or newsletters. Partnering with market research firms can also assist with the same. Analyze market data. Look to your competitors for information and insights related to target markets. Analyze the differences between your audiences and your competitors' audience and the reasons behind them preferring them. Analyze the most popular product segments. Now review personal networks. As your personal network, friends, family, colleagues, funders, mentors, to examine your product or service. Use their feedback to craft some assumptions about your target users. And after gathering the aforementioned data, make buyer personas out of them. Now, what are the key performance indicators? KPIs. It's extremely important to analyze certain growth metrics in order to measure startup success. Customer acquisition cost. The price you pay to acquire new customer. Calculate a CAC by dividing the total cost associated with the acquisition by the total number of users over a period. Customer life value. The total net profit attributed to a customer during his or her relationship with the company. Calculate LV by dividing average order divided by 1 minus the repeat purchase rate, subtract that number by the CAC. This is how you're going to calculate your customer lifetime value. Now, burn rate, the rate at which a company spends capital. Calculate the burn rate by defining an observed data period. How much money did you start with at the beginning of the quarter? How much money did you burn during the quarter? Divide by the number of months in observed data period. Let's go to gross profit margin. measures revenues. What does gross profit margin do? That measures revenues after paying the cost of goods sold. Calculate gross profit margin by dividing revenue minus the cost of goods sold. Now, conversation rate. Conversation rate measures the desired action that consumers take. Calculate the conversion rate by dividing the number of conversions by the number of total visits. This will give you the conversion rate. Now, monitoring your competition. Competitor analysis is important because what is it that your organization is doing better than your competitors, so as to divert the market towards your product or service. Not only initial analysis, but a constant monitoring of competition is important to be up to date. This helps in providing a holistic view of the market. For example, while your product might be great, your competitor might provide a more seamless service to its customers, diverting your consumer base. Now, smart hiring systems. Smart hiring systems entail bringing the right people on board, an informative onboarding process which familiarizes them with the vision, mission, and view of the company and retaining them. In many instances, investors invest in the right people than in the right product and service. Because of the right people can direct a good company onto the direction of greatness. These hiring systems must be set into place since they become very important part of the company culture. Now, collaborations and marketing. Collaboration is one of not only needed inside your company, your growth mindset needs to extend to partnerships with people, organizations outside the business. Entrepreneurs should build a network of partners like service providers, sales partners, suppliers, and customers. Know where and which segments to market in on the basis of which brings the most ROI. Test and implement because not every form of marketing is scalable. Use data to support your decisions and choose very, very wisely. So, thanks to all of you for seeing my presentation. If you have any further questions, you can uh, ask me uh, if you have further questions. Um, I hope my PPT was visible to all of you. Let me share it once again. I hope my PPT is visible to all of you. This is what we shared today. Um, that if you're not scaling and you want to, then you need to go in and closely examine four areas: people, strategy, execution, and cash. Now, these I'm just repeating, very quickly. Growth versus scaling up. Growth involves increasing revenues, generally by employing a lot of resources. Scaling up, on the other hand, involves increasing revenues by doing so, by incurring minimal cost or resources. And in order to scale up, the organization must have perfected its product market fit. Once the organization is sure about its customer segmentation, acquiring costs, and features, only then it is right to scale up. After analysis that the units are economically sustainable, the organizations can scale up. Now, identify your target audience. Like I mentioned, gather your service data, analyze the market data, review personal networks, and data is very, very important. Once you have this data in order, you can easily identify your target audience. Now, let's go to the next slide, which is key performance indicators. It's extremely important to analyze your key performance indicators One is customer acquisition cost, the other is customer lifetime value. Now, these are the two key performance indicators that you must have in order: your burn rate, your gross profit margin, and your conversion rate also needs to be in order in your key performance indicators. Now, monitoring your competition, it is very, very important to have your competitors in order. Competitor analysis is important because what is that your organization is doing better than your competitors so as to divert the market towards your product and services. Now let's go to smart hiring systems. Now, if you don't have smart hiring systems that entail bringing the right people on board, an informative onboard process which familiarizes them with the vision, mission, and view of the company and retaining them, and in many instances, investors invest in the right people than in the right product and services. So make sure that your hiring systems are in order. Now, collaborations and marketing. It is very, very important to have collaborations in order. Collaboration is not only needed inside your company, your growth mindset needs to extend to partnerships with people, organizations outside the business as well. So make sure you are collaborating on platforms like these, come on VCTV talks, ask questions live, go to webinars, meet people, meet your service providers, sales partners, suppliers, and customers. And then this is all about. So I would stop sharing and we will take questions from the audience now. Now, I do see a lot of questions that have come up. The first question is, when should a startup become scale up? Now, coming to the answer, this is a very good question and thank you for asking me. When should a startup become scale up? A startup can be defined as a new company with big growth plans without geographic restrictions. It's on a mission to find its repeatable, scalable business model. They are still experimenting with things like segmentation, customer acquisition costs, and product features. Basically, your startup, until you prove your business model, you are a startup until you prove your business model. And, you are a scale up when you already have proven the model and you're scaling your revenue. Thus, while startups are figuring out stuff like customer segmentation and acquisition and product market fit, scale ups should have perfected it. So these things are really important. So hope I've answered your question. Now we have another very good question that has come up. How can startups scale up? This is also a very, very important question, that how can a startup scale up? Identifying target audiences, having your key performance indicators, monitoring the competition, and having your smart hiring systems in order. Now let me, show you back my PPT where I have shown these slides of identifying your target audience, the key performance indicators, and monitoring competition and smart hiring systems. I'll just show you this particular slide where I have shared this part. See, this is what I have shared with all of you. Sorry. So basically, if you have these things in order, your key performance indicators, you are monitoring your competition, and you have smart hiring systems, you can easily scale up your startup like I have showed in my PPTs to you before. Now, going back to, what are the challenges for startups to become scale-ups? Now, let's see what are the challenges in a startup to become scale-up. This is a very good question coming from the audience. So I would like to answer this. Leadership skills and hiring the right people and marketing and collaboration. These are really important things, and some of the challenges that you need to overcome and become scale up startups. Uh, we have another question coming up now. What is the difference between the target audience and target market? This many times, even on my VCTV shows, people have asked me, what is the difference between your target audience and target market? So let me tell you the difference here. A target market is a set of consumers that a company plans to sell or to reach with the marketing activities. And a target audience is a group or segment within that target market that is being served advertisements. This makes the target audience a more specific subset of target market. So, hope I've answered your question here. And we have another question coming up. How do you identify a target audience? Now, how do you identify a target audience? Analyze your customer base, carry out client interviews using consumers and surveys through email blasts, newsletters, outsourcing the same to market research firms. Conduct market research and identify industry trends. Look at the market research for your industry to determine where there are holes in a service that your product can fill. Look at the trends for similar products to see where they are focusing and where are the efforts going, and then go further in onto your product's unique value. So I think this will really help you to understand or identify your so-called target audience. Let's have a look at another question that has come up, which is, okay, going back to the previous question, that how to identify the target audience, I forgot to add that identify who your target audience isn't also, because it is important to know which demographic will not yield returns, and keep revising the identified audience from time to time. Also use a lot of Google Analytics to create more data-driven decisions. Now let's go to the last question. And how does one create buyer personas? Now creating personas is a great way to drill down into specific segments that make up your target audience. This is especially helpful if you have the product that appeals to a wide swath of consumers. Personas allow you to determine the general demographics of personalities and needs of your target consumers. Personas are created based on data, surveys, digital engagements, and other information marketers can pull from to give more complete view of the buyers. And this might include favorite hobbies like television shows, publications, and it is recommended that marketers develop between 3 and 5 personas. So, hope I've answered your question. How does one create buyer personas was the last question for today. Um, for reaching me out, please feel free to reach me out on my LinkedIn or my website www.convanto.com. And I thank all of you to come here and listen to my insights on scaling up and growth strategies. If you have any questions on this, please feel free to reach out on www.convanto.com or my LinkedIn. And thank you once again, Abhibek, and the whole of Latokan TV for having me here. Have a good day, all of you, and